Okay, let's go over the basics. Term policy, temporary, short term. Let's say it's 30 years. You get a term policy for 30 years, you die within 30 years, your family can cover your mortgage, any outstanding debts, and have a little bit of money left over when you're gone. Term with living benefit. You can do all of that, and while you're alive, if you have a chronic, critical, or terminal illness, you can accelerate that death benefit, use it while you're alive, pay for your medical expenses, pay for your bills, and get well. Worry about your healing, not about your finances. It's awesome, but still only 30 years. Next up, whole life, permanent coverage. It's gonna last you forever. It also builds cash value inside the policy. So you're gonna get permanent insurance, you're gonna leave a legacy, and also you can use the cash in that policy for whatever you want. Universal life, same concept, more flexibility. There's variable, regular universal, and index universal. Usually those are gonna give you higher interest, so a higher return on your money. Savings account is inside, it's growing with like the S&P 500 or other index funds. It's flexible, you can put in more, you can put in less depending on where you're at per year, and you're able to pull money out for retirement, send your kid to school, do whatever you want, and again, it's super duper flexible. With all of these, you need to talk to a specialist, preferably somebody who's non-captive. So if you're looking for an agent, click the link in my bio.